Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be doing our daily transparency update. So that's just us talking about my gains and losses for today, and also me discussing my thoughts and predictions for the future, and also just my thoughts on some of the stocks that are making some notable movements within the portfolio, whether that is Tesla at minus 2.80% for today, with us slowly nearing that under $1,400 marker, or whether it's Apple, which is still nearing all-time highs right now on another really great day at plus 1.20%. So as always, if you do appreciate these videos, please make sure to smash that like button. But just starting off with the portfolio for today so far, as you can see, we are at $108,071.36. So we're still up there at this point, even though we've had some ups and downs and so much volatility for what seems like over a month now. We still haven't lost too much from where we were originally at. So right now, $110,000 is the sweet spot for the portfolio. I'm even still hyped to have 108 because I feel like it could be a lot worse at this point considering how much we've gained over the past year. I mean, we're still up 49% just over the past year, and we have many months left of progress. So I'm really happy with this portfolio so far, and we are now entering for the monthly a negative number. So we're at minus 7.84% for the month, and most of that is specifically just because of this drop on July 13th. July 13th was the day where we had a huge spike in the portfolio. That's because Tesla absolutely skyrocketed. So pretty much we had a ton of progress on July 13th and we lost it all, and we're just midway through that for this monthly date right here. So by another day, this shouldn't be such a drastic move downwards, considering that it had jumped up just so much in the short term and dropped back down. It just looks really bad at this point because it makes it look like we dropped from like a really high point that was consistent, but it was really just like a fluke almost, with this being so high up immediately and then right back down in the same day. But like I said, as the month goes on, there's really not a lot of progress as we're seeing, and that's just to be expected when it comes to investing in stocks like Tesla and others out there that have already ran up so much. It's about time that they pull back a little bit or stay stagnant a little bit, because if it kept going up even after that, I would be worried about a crash, because usually like what we saw just in the past year, like in the months of February especially, we saw it start running up a little bit right here in January, then we had a little bit of a pullback once again, and then after that it proceeded to run up through mid-February, and then we had a really crazy run up. Like on February 14th it started getting really crazy, especially as it hit February 18th, and then it started going higher and higher and higher, and at that point it was almost just too good to be true, and that's when we saw the crash start happening. So I would much rather a pullback happen with a portfolio rather than it just keep on running up and running up and running up until it just can't go at that rate anymore. It's not realistic to go at that rate anymore, and that's when things start to get a little risky and scary. So I'm honestly okay with pullbacks. Pullbacks mean that I have more time to gather some money, earn some money, and put it into the stocks that I'm interested in at a discount. So just addressing the portfolio for today, like I said, 108K. And today's normal market hours, we lost 1.57%. That's minus $1,727.76. And then for the after hours, we are currently at minus 0.31%, or minus $332.76. So not the worst day ever, but it is a little bit more than someone else's typical portfolio movement. For example, let's say you have all of your money in VOO. That's just up 0.22%. NASDAQ is down 1%. Amazon's down 0.6%. So it's a little more than your typical average. It's over 1%. So just addressing how the market started off for this Monday, we started off in the pre-market at 9 a.m. at minus 0.10%. That's around minus $113. And then up until this 9:30 a.m. marker where the normal market hours started, we hit this peak at 9:25 a.m. That was the highest peak of the day at minus 0.05%. And then once we hit 9:30, that's when we started to see a little bit of a downturn with a few bounces here and there. It teased us a little bit at 9:45. That's at minus 0.43%. Then it dropped back down and bounced up just temporarily at this 10:15 a.m. marker. And then this is when it really started to go downhill after 10:15. And that's when we hit this point at 11 a.m., which was by far the lowest point of the day at minus 3.11%. That's minus $3,420. And then we finally bounce back up. So with these stocks, as you can see, We saw this consistent with Apple especially and Tesla. So you can notice from these charts that people did start to buy in this discount area. So it did bounce back up, hit this point at 11:25 a.m. That's at minus 2.22%, and then it bounced back up once again with a little volatility here and there until we hit this point at 12:40, in which it started that general trend back upwards once again. We hit a little wedge point at 1:05 p.m. That's at minus 1.65%. So we're slowly regaining a little bit of our progress as it keeps wedging upwards. We hit this point at 1:25 p.m. That's at minus 1.07%, and that's really the highest point for the rest of the day. At that point, it starts going down just a little bit, not too much honestly, and we just have a little bit of that typical stock market movement of that up and down volatility. We hit this point at 3:50 p.m., 10 minutes before the market hours close, and that is at minus 2.12%. That's minus $2,334, and then it bounced back up as we enter into the aftermarket hours at 4 p.m. So that bounce at the end was pretty nice, and then it dropped back down a little bit, but the general trend isn't too much movement for the after hours so far. We're only at minus 0.30%. That's a little bit more than your typical minus 0.10%, minus 0.15% for after hours, but still not a bad day. Yes, it's a red day, but nothing fundamentally has changed for me. This is just your typical stock market movement, and you have to get used to it, especially if you're a new investor. For those of you that are new out there, if you just bought into a stock and decided to make your first stock purchase and it's down today, don't worry too much. As long as you picked a high quality long-term stock, that's just how the stock market goes. Honestly, if it weren't for these videos, I'd probably be checking my Robinhood app like 1 or 2 times a day, and that's about it. And if I weren't doing these videos, some days I would probably not even look at it, just because the movements do not change how I feel about the stocks unless I'm planning on buying sometime soon and I'm looking for a purchase opportunity. And speaking of a purchase opportunity, let's go ahead and check out Tesla stock. This is nearing $1,400. I think that this is the closest that we've ever gotten to $1,400 after this most recent run up. Let's go ahead and check and see if that is true. So yeah, after the run up, this is the closest that we've gotten to that $1,400. I guess on July 24th, it's a little bit similar. Yeah, so on 3 p.m. on July 24th, it hits about almost exactly the mark that we're at today at 1412. So we haven't really seen any opportunities under 1400 after this run up that we had most recently. So for those of you out there that are interested in buying for the long term, this could be an opportunity. Of course, it's up to you to decide how you feel about that. However, I think this isn't too bad of a price to get in on Tesla stock, especially with some events coming up in the future within this next year, like Battery Investor Day and other potential announcement and news pieces as well. So this could be an opportunity for those of you out there that are interested in purchasing. Now, I don't know really what to expect within these next few weeks. I have said in previous videos that we could start to see a little bit of an incline towards the end of August and especially the early weeks of September as well, with Battery Day being on September 22nd. So people start to get excited a little bit as we get closer to that date. So about midway through September, we could start seeing some move up or some significant run-ups just based on a little bit of hype. Now keep in mind, the stock could decline after that event if there's nothing really significant that's announced, or if it's just information that we already expected. So keep in mind, it's kind of like playing earnings as well. A lot of people say don't try to play earnings because a lot of times it's honestly unpredictable. You can get really positive news and the stock still dumps afterwards and drops significantly, even if they smash expectations. So it just all depends on how people are feeling about the stock in the future. And so I kind of would consider this similar to playing earnings. If you're interested in options, if you're more of an options trader and you're thinking about putting in some calls or puts, just be careful because this is kind of similar to playing earnings, in my opinion, with Battery Day coming up. If you're playing based off of Battery Day, I think you really need to be careful because it's really unpredictable to see how people are going to react to these events, whether we're discussing the build up to these events or what happens after the events. Just keep that in mind. It is a little bit risky. And just for the long term, I think it's a lot easier to predict that Tesla will be successful rather than saying this share price will grow to this number by the time of this event and so on and so forth. So keep in mind, short term is a little bit more difficult to predict, but just addressing the numbers for today, as you can see, we are currently at minus 2.80%. That's minus $1,400.81. And then for the total return, we are at plus 66.61% or plus $19,424.88. So we're still looking really solid for Tesla in terms terms of the total return. And then we just had a rough day for today. Honestly, not too big of a deal for me. And then for Microsoft, we have another loss for today at minus 2.11% or minus $873.60. And then for the total return, we're still at a nice plus 21.36%. That's plus $7,139.28. So this is one that I actually feel bad for. If Microsoft was actually a living person, I would actually feel bad for them, because this is like one of those really underrated, underappreciated stocks, especially in terms of value. This is one of those that I feel like should be much higher up than $208. I feel like $215 would be a good sweet spot right now. That factors in a little bit, just a tiny bit of that TikTok deal, and then also just their business model as well. I mean, consistent growth over time. They consistently beat earnings, they offer dividends, and they have a lot of digital service and cloud-based software with really solid profit margins. So this is one of those stocks that I feel like is undervalued at the moment. I feel like the price doesn't represent the stock's worth, at least in my opinion. I feel like it should just be a slight bit higher. Now, $228, the fair value that's for Microsoft, I feel like that would be a pretty solid fair value, but even just a little bit under that, like I said, $215, $220 would be pretty solid right now. That would still be a pretty solid buying price in my opinion, if you're holding for the long term. So I kind of feel bad for Microsoft, just because it's like, man, this stock gets a beating, even though I feel like it's worth more than this 208 marker. Or we could at least say 208 is a pretty solid price, but it's still not grown much over the past month. It's down 3% in the past month, and I feel like that doesn't really represent what Microsoft is worth in my opinion. But just checking out the last stock for today, we have Apple stock. That's a huge mover. Really no complaints about Apple whatsoever. We had to have a pullback a little bit just after that most recent run up, so that's to be expected. But this is just one of those stocks that I'm really happy with, and I may consider adding more to. Apple or Tesla are at the top of my list right now in terms of me putting more money into. I could actually see me putting some money into Apple, similar to with Tesla as well. Like I said, once I get some investment money, I may consider this one, because I would love to raise my position up just a little bit more in terms of the portfolio diversity. It'd be nice to hit like 20-25% for Apple, just because I feel like this one is a really solid performer. They have a lot of cash on the sidelines. But just addressing the numbers for today, we are at plus 1.19%. That is plus $222.60. And then for the total return, we are at plus 57.28%. That's plus $6,879.42. And then the rest are pretty much just some free stocks. Some of these actually did pretty well for today, like WPX and AEM. And then addressing VOO, that's what I like to use as the general stock market trend comparison. So this is at $308 right now, and it is slowly getting up there to where it was near the most recent peak. So we are at plus 15.70% for VOO. That's a really solid return considering how much it has recovered since this crash most recently. So VOO is actually making some progress, and it's already up over the typical stock market average. So that's really solid, and I'm surprised with that a little bit. But anyways, hope you all enjoyed this video. Just wanted to share it with you all. If you did, please make sure to smash that like button. And also, if you'd like to begin investing, feel free to check out Robinhood and Webull in the description below. If you sign up with my referral link, then you'll get some free stocks. And especially with Webull right now, you can get up to 60 free stocks depending on how much you deposit. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your week.